Hello, good morning or good afternoon everyone, depending on where you're joining us from, and welcome to today's webinar. My name is Tarek O'Darley from Business Review, and I will be kicking things off here today. It is our pleasure to have Auka with us, who will be presenting this webinar, titled Profiting from Mobile Payments, How do Banks Make Money from Mobile Wallets? I'd like to welcome you to our webinar platform On24. This webinar is fully browser-based, so if you do disconnect, just click on the link that you received via email to rejoin the session. All of the icons along the bottom of your screen are the interactive widgets that we have on offer today, so please interact with them all throughout the session. If you click on the green resource list widget, for example, you can view some links that are relevant to this webinar, so please interact with that. If you want to ask a question, you can use the Q&A widget, or you can use the questions box at the top left-hand corner of your screen. The plan is to try to get through as many of your questions as we can once the presentation has concluded. Please use the yellow help widget if you experience any technical difficulties or require any more assistance. You can also move, resize, and maximize any of the objects on your screen, or you can go full screen on the slides as well. So now, without any further ado, please allow me to welcome today's first speaker. So, Daniel, over to you.
Thank you, Tariq. So, hi everyone and welcome. I am Daniel Döderlein, the founder and CEO of Auka. So, I'll briefly introduce Auka to you before I hand the word over to my colleagues here joining me today. So briefly about Auka. So we're a mobile payments pioneer. We provide banks and telcos with innovation power through our award-winning white label mobile payments platform. So basically, if you want to launch your own Alipay clone, we fix that for you. So without using this opportunity too much to pitch Auka, I'd like to introduce my co-panelists today, two super intelligent and knowledgeable and highly relevant individuals for this subject today, Brett King and Knut Anders Wangen. Welcome, guys, and thanks for joining.
Thanks for having us on the webinar, man.
Yeah, thank you.
My pleasure. I thought we could start briefly by having you guys introducing yourselves so that the audience can get to know who you are, unless they already do. I think we could start with you, Brett, if you could give the audience a couple of lines about who you are and what you've done.
Sure. So I am the founder and chairman of a startup, neobanking, challenger bank startup out of the US called Moven. I'm also the author of a number of books in the sort of futurist space, mostly focused on banking. My new book, Bank 4.0, comes out around August 15th. And I run the world's leading fintech radio show called Breaking Banks. We've been around for 5 years. We have about 6 million listeners in 177 countries. Yeah, that's the brief history, brief bio.
Talk about being relevant for this webinar. Thanks, Brett. Same for you, Knut Anders.
Yeah, so my name is Knut Anders Wangen, and I work with Danske Bank in the Norwegian market area. I am currently in a position as commercial director with responsibility for portfolio management, pricing, marketing, digital sales, and partnerships. But before that, I used to run our mobile pay initiative in the Norwegian market area, and we will be talking a lot about that here today. Mobile pay being a market-leading mobile payment service in the country of Denmark, and we tried to launch the same service in the Norwegian market area, but only to be outcompeted by Vipps, which was a similar service that was taken to market by our biggest competitor, DNB. So I'll be happy to share some of those thoughts with you today.
Yeah, we really look forward for that. So thank you both for joining me today to do this webinar. This is all about sharing information and knowledge and giving our listeners some good advice based on our experiences. So we will talk about mobile payments.
I will make one small observation, Daniel. I am in Australia doing some work down here, and it is midnight, so please bear that in mind with my comments if I sound tired.
Yeah, that's fine. Thanks for warning us, Brett. So we will dive into mobile payments and look at what it really is. And we prepared a couple of slides that we can use as talking points for this session. So I think we could sort of start to kick this off because when we're traveling around the world to try to show people what has happened in the Nordics, which is where Auka is coming from, and also you, Ms. Wangen, with mobile pay, Sometimes we struggle with telling the story about mobile payments because when we deal with banks and also telcos, there's this preconception that mobile payments is an NFC-based wallet. So I thought maybe to kick this off, since we're predominantly going to talk about the successful wallets, they all have a few things in common, and I think we should try to cover that. So I'll flip us over to the slide and try to answer the question, what is mobile payments, the way we define it, and what has been the sort of recipe for success for all the various successful mobile payment schemes out there, to sort of set the scene. So I'll slide us over to this particular slide, and please feel free, both of you, to jump in here. These are our slides, and we use them as talking points to try to describe these successful wallets. What we've realized is that all of the successful wallets out there all share this common setup. And the first important part is obviously that they're phone agnostic, so they're not specifically made for a particular Android telephone that has like an NFC chip built in. It's just simply an app that you can download. And predominantly they're also targeting the whole market. So it's not for the banks or the telcos' own users only, it's for everyone in the market. And once the app is available for everyone, what we see is that on the left-hand side, in terms of funding, these apps are typically quite flexible in terms of the options you have as a user for funding your wallet. So we'll talk about that in a bit in terms of the bank account, which is predominantly happening in Europe. It has happened in the Nordics specifically, and I know Knut Anders has some very good insights for all of you out there about the direct debit functions connecting a successful mobile wallet directly to a bank account, and then also some predictions in terms of what will happen post PSD2 in Europe when all of these accounts are being opened up. But the core concept here is that your mobile payment wallet needs to be flexible on the funding sources and preferably connected directly to bank accounts. Most of them also accept cards. There are plenty of exceptions from that, and we'll hear more about that later when we look into the international wallets, especially from China. Oops, what happened here? We'll skip back quickly. This one. And finally, there's also this opportunity on the funding source side to have credit lines. And we have some experience helping a bank pushing credit lines on the mobile phone instantly. And also fundamentally often prepaid. And I guess we'll touch on that when we talk about the international scheme. So you have a stored value account right there on your wallet, so that kids and unbanked and others can enjoy. Now, on the right-hand side, which I think is the most important one to sort of define mobile payments, is that it's not limited to walking into a store and clunking your phone towards the payment terminal. It is way more flexible, and predominantly it typically starts with the person-to-person side of things. So you can send money in real time to any phone number, and you can also do commerce payments to merchants of all shapes and sizes. You're not bound to hardware. So the merchant can just use their phone to accept. They can even accept payments without the phone. So that would be a QR code or a merchant number. You're just sending the money to the merchant like you would normally send a person-to-person transaction, which opens up a whole new range of possibilities for merchants to accept payments without relying on hardware, which separates these type of schemes completely from the card-based schemes where you have to have a payment terminal. We've also seen in the Nordics that you can progress out of the SME and sort of smaller merchant segments by enabling in-app payments in other popular apps, and then finally also online and in-store eventually. And I guess maybe you could give us some insights here, Knut Anders, on the tactics that you've seen from your experience with this dynamic on choosing whether or not to start with person-to-person payments and mobile merchants or going directly in store, which seems to be very typical for these successful mobile payment solutions that we've seen, that they start in the opposite end of what the unsuccessful and sort of NFC-based solutions have done by going directly into the store. Could you give some insights on that?
Yes, I think the obvious answer to why you go in store first is to hunt for where the money is and where the volume is at the starting point. Whereas the successful wallets in the Nordics have gone for the P2P networking effect initially, and you've seen the hockey stick effect on how these networks form, creating incentives to push the service to friends and family, and then becoming or forming this impenetrable fortress for others to work up against. In mobile pay, we went for the SME solution after that, because that's where cash was primarily the main, the only place where it was used in the Nordics at that time. The societies were basically about to be cashless, but there was still the need for cash in smaller, amongst the SMEs and smaller businesses. Then tackling that issue by offering an SME service, then moving on to the larger merchant and retail space, where you see the volume but pressure on the margins, obviously. So starting with the network effects from the P2P side, and on capturing the front end of it, but basing that on infrastructure that was already available, such as the card schemes. That was the starting point.
Right. Thank you for that insight, and it's real insight, because it's something you guys did, and I find it really fascinating. And I think it's interesting to see that when banks talk about these mobile payment solutions, they often think about the NFC wallets, and sort of when you look at this particular slide, in reality, these, let's call them traditional mobile payment solutions that are card-based, are actually on the left-hand side only the card, and on the right-hand side, in terms of the use cases, they're actually only in store. And one thing which is interesting, derived from what you said, Knut Anders, is that when you're trying to bring such a solution into the market, you're actually not solving any problems for anyone, because in the store you can still pay with your card already. So unless you're operating in a market where people are 100% cash and the larger retailers are still cash, you wouldn't really have any benefit. I think that sort of chimes through to all of these various mobile payment solutions that have been successful, is that they're looking exactly as you said, starting sort of bottom up, servicing these scenarios where there are still problems to solve. I think that's a good segue for us to.
Yeah, I'll jump in here a little bit as well, because one of the things that you have in successful markets where mobile payments have got let's say near 100% urban penetration, with the adult population. There's a few examples of this already, China, Kenya, etc. Where that has mostly happened, they are not adaptations or iterations on the plastic model. They are sort of first principles design thinking, and they largely use things like network effect and things like that to have been successful. So where you've got legacy payments and you try and iterate on that, the problem you've got is the legacy payment behavior is fairly well embedded. So markets that don't have a lot of legacy payments behavior tend to get mobile payments adoptions faster.
Right. Thanks, Brett. So I think it's time for us to sort of step over to the next slide, still continuing on the path of defining what successful mobile payments really is all about. And then we can start to look at the subject for today, so how you monetize it. So I want to bring us over to this slide to be more concrete, because we know this very well. You, Knut Anders, and myself, coming from the Nordics, and have been part of pushing this revolution. And then Brett, that can give us some insights on what's happening internationally as well. But I still want us to stop on this slide, because I think it's very important that our listeners understand how massively successful these proprietary mobile wallet solutions have become, right? How successful they really are. And I guess looking at this, like Knut Anders and I, we can do the three first here and talk about the Nordics, because we know it very well. Do you want to fill us in on mobile pay and the current status and the adoption? My example here takes Denmark. I think those numbers are actually a bit outdated. I think they're even higher. Can you give us some insights?
Yeah, I think so. And mobile pay was started 5 years ago in Denmark in 2013. and it quickly picked up throughout the year in 2013, giving 1 million users quite fast in a population of only 5 million, setting the scene. And it was taken to market by one bank, Danske Bank, in competition with all other banks. So that was the first interesting part, was that one bank, instead of only producing doing a product that was for its own customers, it targeted the whole audience or the whole mass market, and that created a new dynamic in the competitive landscape, obviously. Competitors followed, but mobile pay was able to keep the first mover advantage from the networking effect in the P2P space, and quickly, or not quickly, but in a couple of years' time, all other banks joined mobile pay to create not only the front end, but also to establish the infrastructure that was needed to do it. Initially, it was started utilizing the card schemes, MasterCard, Visa, as the way to deduct money from those cards and transporting them to persons and businesses. That's obviously not so good for the business case to utilize a third party like that. So banks have come together to work towards a direct debit part, which is now enabled in the Danish market. It was since launched to Finland in 2014, and then in 2015 we launched it in Norway, which I was a part of, in competition with the DNB, which is the next logo on this market, or on this slide. But they had gotten a 2-month head start, and by the time mobile pay hit the market, the viral effect of the P2P network had already spread, and they were up towards 250,000-300,000 users 77 days after the launch and when mobile pay launched, and that ultimately became too much of a hurdle for mobile pay to tackle, even though the product had a 2-year advantage when it came to maturity.
Thank you. So would you say, I mean, learning from the experience then from the Nordics and Denmark and Norway here specifically, would you say that from your experience then, being number one is very important versus being number two?
Yeah, so I think timing is crucial. I've often also said that the marketing effort that DNB did and the channels that they had at their disposal, being the largest bank in Norway, obviously had a significant impact as well. But the first mover effect and the network effect was extremely important, and it led to them fighting off all the charges that we did with mobile pay being a little bit more mature, so we were able to come with in-store solutions and online solutions before them, but it didn't really stick because the network effect had already taken place, and there seemed to be a conception in the market that there is only one mobile wallet, and that was Vipps.
Right. So both in Denmark, when Danske Bank launched this and sort of took the market, it was clearly a huge benefit to be number one, and then all the other banks tried to compete, but they failed, and then they finally joined. So being number two is not really a good position to be. And then likewise, then in Norway, with Vipps doing what they did, even mobile pay being introduced a bit later and being technically service-wise actually more mature, but then again the execution and being number one proved to be very important. There is an interesting dynamic here, because if you look at the adoption rate for these two, I think mobile pay is now closing in on 80% in Denmark, and Vipps is a bit higher than this number, so it's not really updated yet. But if you look at Swish in Sweden, just to give some insights to the listeners here, because number one and number two, so mobile pay and Vipps are both, at least initially, they're single bank initiatives trying to take the whole market and executing that very successfully. But then when you look at Swish, this is a collaborate model, right, where they did exactly the same as mobile pay and Vipps in terms of bringing a proprietary mobile payment wallet into the market. It's not branded by one particular bank. It's not inside the mobile banking app. All of these apps are separate mobile payment apps, available for everyone. But because of the collaborative model, it seems like when you look at the numbers that Swish actually has a lower adoption rate by the numbers. And also looking at the technology development of Swish versus Vipps and MobilePay, we see that they're lagging behind, even though they were quite early into the market. Do you have any insights on why do you think that happened, Knut Anders? Why were Swish?
I think competition is always good, and by feeling the heat of competitors, it is kind of a do or die situation every day. That goes from the CEO level and down to the coders that actually do the job, and that just pushes you. And it pushed MobilePay, it pushed Vipps, I'm sure. They were afraid every day for what service we might launch or what deal we might make, and that pushed the development of that service, and it grew on the service level very fast due to the competition in my mind. So that competition is one thing, but also how you organize this type of innovative efforts. If it's a collaborative model, you have larger banks, corporate banks that wants to enter the point of sale space, perhaps, but then you have the smaller savings banks that are more keen on developing further into the SME space, and it is more difficult to actually prioritize development when it is starting off as a collaborative effort.
Great, thanks. So before we move on to the international ones, I just wanted to make a small point. So this is a very Nordic phenomenon, right? So we have these three very successful schemes that are dominating. We're talking about the fact that they are connecting directly to bank accounts. They're skipping the card rails. So I think to me, it seems like the actual losers here at the end of the day is actually the card schemes, because all of this is very popular in the market. Everyone is using it all day long. Merchants are joining. But these are not card payments anymore, right? So what do you think Visa and MasterCard thinks of this?
I think that this is obviously an issue. You see that the cards, I think Vipps and MobilePay were one of the largest users of or online users of card payments for a while, but then overnight it switched over to direct debit transactions, and then I think it hits them quite hard.
Yeah, I think so too. Now, I wanted to bring our attention to the international side and bring Brett into this as well to get your views. So when we're out there traveling and showing these fantastic numbers for MobilePay, Vipps, and Swish, we always get this like, well, that's a statistical outlier. Nordics are different. You guys are rich. You have all the smartphones, all the technology. So this doesn't really apply to us. But on the slide, we have at least three examples. I guess you have multiple more. So it proves that that's not really right. Could you let us in on your experience and what's happening out there that confirms what is happening in the Nordics is actually happening elsewhere, and there's a system to this that's undeniable?
Well, first of all, the major stat you need to understand is that this year mobile payments globally will overtake card payments. So, that's a pretty significant statistic. That's primarily based off the volume of mobile payments that are happening in China, which I'll get to in a moment. But we are seeing some pretty aggressive growth in markets even like the United States and in the UK and so forth. So India obviously with Paytm is coming along, Kakao in Korea, M-Pesa in Kenya, Globecash in Philippines, MTN in Nigeria. I mean, we're talking about a lot of different mobile schemas. So what I will say is that you've got here 8 billion for Venmo from Q1 last year. That number is almost tripled for Q1 this year, and in fact Zelle, which is the bank-to-bank payment network that has been launched to compete with Venmo, will do 170 billion or close to 170 billion in payments this year just on Zelle, and that is about the equivalent of the entire mobile payments traffic in the US last year, which was about 190 billion. right, in mobile payments. That's still a small percentage of US payments overall, but it's obviously pretty significant growth. So there'll be something, close to $500 billion in mobile payments in the US in total this year. But that pales into insignificance with what's happening in China. So you've got their Alipay, 520 million users. Actually now it's 680 million users for Alipay, and 600 million users for Tencent WeChat. Obviously there's some people have both of those wallets on their phone, but there's also, quite a bit of people. We think the number is probably about 850 million of the Chinese population are now mobile. Now, the really interesting stats around that is that we're talking in urban centers, about 87% of the adult population are now primarily mobile payments, and that's happened only in the space of about 3 years. In fact, for 74% of people living in urban centers in China, it is said that they can carry 100 RMB, the equivalent of about, I guess it's about $25, $30, and no, less than that, sorry, about $14 US, that they can carry that 100 RMB in their wallet and will still have it more than a month later. So that sort of shows you the fact that mobile payments has just been so phenomenally successful. 17 trillion in mobile payments last year in China, and that's expected to increase by about 60% this year, which is obviously why that's the strongest driver towards the domination of mobile payments globally as versus card. But one of the reasons it's been so successful in China, where we've gone from basically, in the space of about 3.5 years, we've gone from a situation where cash was absolutely dominant in China to now where in the urban centers, only 12% of restaurants in Shanghai will take cash anymore because of this shift. So it sort of shows you this very, very rapid acceptance of mobile payments. There's a couple of reasons for that, but one of it is that unlike Europe and unlike the United States or say Australia where I am today, in those countries there's a lot of legacy payments behavior. So you have in the US checks, you have card and so forth. In China, card penetration was fairly poor before mobile payments came along, and they didn't have checks at all. So the dominant form of payments was cash. So, in the Nordics, in Europe, in the US, Australia, what you have to do to get someone to adopt mobile payments is you have to get them to change their behavior from their previous method of payment, whether that is using a card or using cash to pay. In China, that was easier because of network effect, that they had relatives and friends and business partners and so forth, merchants that they frequented, because of network effect, both through e-commerce on the Alibaba and Taobao platforms or on social media through the dominant social media platform WeChat. That network effect was a very powerful motivator to move people quickly, and as that sped up, it created that hockey stick of growth. But I think, really the view that mobile payments is something that's going to happen in the future, I think if you're still thinking that, what you need to look at is that China is a precursor for what will absolutely happen in the rest of the market. And that is because there's a couple of key components here, is that it's not just about the methodology of payment, but it's about the fact of the context of payment and the fact that payments get smarter when you make them mobile versus just being a dumb transaction. So the key problem you've got with a plastic card or with, like a check in the US is that before you make the transaction and after you make the transaction, you don't have any context on, what your balance is before and after a transaction, whether it is a good transaction. You don't get perspective on rewards or a deal that might be attached to that necessarily in real time. Card payments are essentially dumb without context in a digital world, and so that's really what I think is driving this shift around smarter payments on the mobile platform.
Thank you, Brett. Really insightful. So I think we can conclude that mobile payments is not the future. It's already happening, and learning both sides of the story is really relevant. So Nordics, banks have done it. Banks have successfully driven growth, taken the market, and are moving away from the card rails to save money and to own the interface to the customers. And in fact, the statistical outliers in this are other markets like China, which is really driving the adoption exponentially and solving problems.
Just on that point, Daniel, 98% of mobile payments are now owned by two non-bank networks, Tencent WeChat and Financial Alipay, two technology companies, not based on previous rails. Now, what's the concern for banks about that? If they don't own the networks and they don't get mobile adoption fast enough, then the tech companies have the opportunity to come in and take adoption. And in China, why that's such a critical problem for banks is that even though some people have debit cards or existing bank accounts, and they can use those to cash up the super wallets, transfer money when they get paid into the super wallets, that's a one-way street. The money that gets deposited in the mobile wallets never goes back out to the bank account. And increasingly, what's happening now is as people are starting to, they have they're doing the gigging economy stuff. They have their business on the side, so they're a merchant as well as a consumer in the space. As they build up balance in their wallet, they're now using Tencent WeChat and Alipay investment and savings products built into the super wallet. So now what you have is 40% of deposits in China are at risk because of the advancement in mobile payments. It's a pretty significant concern for the Chinese banks.
Absolutely. I mean, the value stays in these closed networks, right? Which per definition used to be like closed networks, but in reality, they're not closed networks because they reach everyone. So by definition, they turn around and become the de facto. Now, this is a great segue, by the way, because you said if you were a bank, you would be concerned about this. And let's bring it back to Europe. I'll skip the slides for the traction in Scandinavia that we've seen already. We'll just browse through that so the audience can see it. We know banks have driven that, and it's exponentially higher in other markets as well. We want to touch on this subject in a moment because we're supposed to talk about also how banks and also then the insights on how Alipay and the others are monetizing that. But on this subject, I think it's fair to touch on PSD2. So in Europe, with this dynamic happening, and we've seen what banks can do, we've seen what technology companies can do and have done. So because of PSD2, one of the challenges that has happened for mobile pay that we heard was that they had to fund the transactions while building the audience through card payments, which is quite expensive. Now, Knut Anders, you coming from the banking sector and building one of these very successful schemes, imagine if you had direct access to everyone in Norway directly to their bank account. How would that play out for mobile pay when you went to market in Norway? Could you give a few words about that?
I think that it could have had a good effect, but what the wallets have been able to do is also go beyond the liability issues that lies within PSD2, where the liabilities within sits with the bank, and then take risk to produce an even better customer experience on behalf of banks, and then let the user experience be so good that you don't need the validation that you would provide as part of PSD2. So I think identity will become easier and easier going forward, but at the face of it, it would have caused some issues regardless with the fact that you need to provide certain identification of a consumer quite often in order to address the liability issue.
Right, and that's a very interesting point. We got a question here also from one of the audience, and I want to remind everyone that you can push your questions through the tool, and we will see how much time we have left at the end here and try to answer as many of them as possible. And also you can continue to pour in your questions, and we'll try to answer them offline as well after the webinar if we run out of time. So feel free to do that. Well, we have one question related to security, which I think is a fine timing for this now. Since we talked about PSD2, we know there's strong customer authentication requirements to access accounts. There are ways around that. You can be listed as a trusted beneficiary, and you can also do recurring payments and so on. So the access to accounts is going, at least we believe that the access to accounts is going to push the competition even further. Now, on the security side, you mentioned something which is very interesting. So creating better user experiences and actually giving stronger security in the payment scenario, though it doesn't seem like it's stronger security because it's lacking the cumbersome normal ways of authenticating you.
Yes.
Maybe you could give some insights on the security side here, both from the China scenario and then also from the Nordics. So was paying with mobile pay more risky for the consumers than, for instance, paying with their card? Knut Anders.
No, it wasn't. It wasn't. You place your card on file with a number of services today, and this was a similar situation. And we could even validate the card live and also upon with 3D Secure upon the login phase, the initial startup phase. So we were able to handle the security part very well, but I think some of the business here lies also to take that risk and be an intermediary between the merchants and the consumer and the banks, and this is where it is difficult, or it is risky for banks to actually lose that part of the game, because risk is essentially what we live off of, and if you place somebody else in the middle, such as WeChat or Tencent, then that is a big issue for banks in my mind.
And
exactly. You want to tap in, Brett?
Yeah. So the big problem we've got is the sort of CNP fraud right now. In the US particularly, this is a real issue. But we're not getting those issues with mobile wallets in China. Fraud rates compared with the percentage of fraud that we get on card not present transactions across the networks is fractional. And part of that, I think, is the security. So you've got not only do you have tokenization, which essentially gives you a one-time, use number with a mobile payment, but you've got a whole suite of other things. You've got geolocation. We can know that your phone is in the same location as the merchant, so that gives us additional security. And then we've got biometrics tied to the device. So for WeChat in China, you use voice verification to enable WeChat as an app, and then that drives the additional layer of security for mobile payments, as well as you've physically got the phone that you need to unlock with facial recognition or fingerprint recognition as well. So we're talking about significantly greater security than traditional payment methods.
Yeah, I can chime in on that as well. Being a vendor that delivers these platforms, I mean, we've seen this, as you mentioned, Brett. The sea of data that you get around the user on a mobile wallet is uncomparable to the lack of data that you get from a card transaction. The card is dumb. The mobile wallet is really smart, and the new type of standards and security that you can apply to it actually means that a mobile wallet is way more secure than paying with a card. I think we all agree on that. Let's move forward because we need to answer the questions related to the revenue side of things. So we've touched on PSD2. We believe that PSD2 is going to open up the accounts. As we know from a regulatory perspective, we believe that it's pushing the need for banks to bring these services to market. We know the exponential growth of these services, both from banks in the Nordics and from non-bank technology providers in other markets, predominantly then from China. But what I really want us to do is to have a look at the revenue side of these mobile payment solutions. So how is this valuable for whoever has the app? And I thought maybe you could tell us a bit about that, Brett, from from the Chinese sector. You touched on this by the fact that there's so many users and there's so much of the fund staying inside the cycle, and they start to buying other services as well. Could you talk briefly about sort of the revenue side for Alipay and WeChat Pay? How are they making their money out of these successful wallets?
So really, where they're doing this is through added merchant services. They're not actually making money off the what we'd refer to traditionally as interchange. So what they're offering is, for example, Alipay is connected with Alibaba, and so there's a whole range of services for merchants through Alibaba selling on their platform. They will underwrite new businesses through that. So there's lending facilities they're making. So it's all the side opportunities that come from owning the mobile payments architecture. The real thing that's kicking in, of course, is credit off of these platforms. So the way you deal with credit traditionally is credit is a product. So you go to a bank and you will have a debit card or a credit card to make payments across the schemes. But what happens when that shifts to the mobile payments architecture like it does in China, and everyone is on these mobile payments networks like Alipay and WeChat, when they need credit to make a purchase, the credit options are served to them in the wallet. And so these don't come from traditional bank sources through a product. They're now enabled through, contextually based on the mobile environment. But, one of the more interesting ones is Alipay and Financial has just raised, or has just said they're going to spend over $1.5 billion on stimulating or incubating merchant businesses in China. So they see that capturing merchants is no longer just about enabling them to have a point of sale, because they don't effectively have a point of sale terminal for these mobile payments tech. What they're actually doing now is investing in everything from like food carts on the street, where vendors will sell food and have and then choose the Alipay schema as their dominant schema, to much more serious platforms for commerce. So that's where they see the opportunities for this. So as a platform, it goes well beyond just thinking of it as a transactional business.
And that's really interesting when you reach those type of scales. I mean, they really impact the local economy or the nation's economy by driving more commerce. It's almost like when you hear about like Google investing in internet access in rural areas, not charging for it, but to actually drive more internet users, and then in turn getting more ad revenue from their channels. It sounds a bit like the same thing. You, Knut Anders, could you tell us a bit about the revenue concepts on mobile payments? So you, as mobile pay drove into the market in Denmark and got the massive adoption, what was the plan? How would you monetize this? And for other bankers listening in, why does it make sense to build and take the cost on marketing and saturating a market like this? What do you use it for? How do you make money?
Yeah. So first, I want to offer some thoughts on what Brett just described, and I've been having dialogues with the largest merchants operating in the Nordics and the Norwegian market, and their first question is, where do you take this wallet? What do you want to become? Are you a threat, or are you a service or are you enabling us as merchants? And I think that dilemma is something that you need to be quite firm on and work with towards the merchants if you are to be picked up by the largest volume drivers in the market today. So if you choose the aggressive approach and try to create the new marketplace out of the mobile wallet, then that will limit also your reach within what is today the largest marketplaces, because they will see you as a competitor and will hold you out. That's so you need to strike that balance very firmly and be quite clear on, do you want to enter that space or not? So that was just some reflection on Brett's comments. Whereas where the money initially is where you solve the biggest needs or the biggest pains. When you solve the issue for the smaller merchants, you see that the short-term profits pools are there. That's where people don't walk around with cash anymore, so they lose business because they don't have anything to pay with, and therefore they're willing to pay a transaction price to actually get access to more business right there and then. Looking at the
No, sorry, just go ahead. I just wanted to keep that point because I have a slide for it that we should touch on once you're done. Go ahead.
Yeah, okay. And then moving into the more professional commerce, such as online commerce and point of sale within the more high end or the volume stores in store. Then you really need to work out you have to have as an efficient infrastructure as possible for it to be a business, and it's a volume game. We all know this, and you need significant penetration. You need scalable models if you are to enter the in-store game, and that's where mobile pay teamed up with the likes of Verifone, etc., to actually enable also Bluetooth connections to do a tap towards the terminals, very much like the Chinese wallets have utilized QR codes to identify store and also perform the payments in store. Seeking volume in professional payments and also servicing SME segment with good solutions to help fill the need. That was some of the basics that we were hunting.
Excellent. So I have a slide for this, which sort of covers also the subject for today's webinar, and you both touched on it. So what is clear is that these mobile payment solutions, either if it's in China where they try to build more commerce and stimulate more commerce by enabling anyone to be a business person and start a business, or if it's like in Norway where you're focusing very much on a more mature market, but you're still in the start addressing these, let's call them underserved merchants, and then you're stepping into the larger retail side once you have the volume. And a very interesting dynamic, I'll switch to this slide now to talk about merchant transactions, because this is the reality that we see here in the Nordics. And I guess Brett can also chime in a bit from the Asian side of things, and also potentially the US side. So one thing which is really interesting to see from Norway, as you started to tell us, Knut, is that, I mean, for those of you who don't know this, Norway and the Nordics have one of the world's most advanced banking infrastructures in terms of collaboration and real-time payments and clearing and settlement. And we have proprietary debit card systems like in Norway that has a fixed fee. So it's very inexpensive for a merchant to accept cards, and virtually all the merchants do. Now, when we look at the pricing, so if you look at Vipps as an example, so the predominant wallet in Norway today, they own the market. And funny enough, as a merchant in Norway, you can easily accept card payments, and they're very cheap, right? So we have the proprietary debit card system in Norway, which has a price range of 0.025 to 0.012 euros as a fixed ticket price, regardless of the amount. So there's no interchange or anything. And the bank's revenue of that is about half of it, which sounds a lot percentage-wise, but I mean, per ticket, it's virtually nothing. You can buy a house with the bank accept scheme, and the bank is making virtually nothing. But when you pay with a credit card, the average merchant fees in Norway ranges from like 0.5 to 1.5%, and the banks make, because it's capped by regulations, 0.2 or 0.3 depending on Visa, debit, or credit. So if it's a credit, it's 0.3. Now, the interesting dynamic here, which has been exploited very much so in Norway, and you can probably shed some more lights on this, Knut Anders, is when we look at the mobile payments offerings in Norway, the fees for these services are way higher than cards. And the profit, because it's a closed-loop scheme owned by the scheme owner, so the bank or the banks, the profit goes directly in their pockets. And could you try to explain why on earth would a merchant pay 1.75 at the low end, or even up to 3.3% for a mobile payment service when they, in theory, could do a card transaction, which is way cheaper? I have some views of this as well, but I want you to try to answer that.
No, I think that's I think this is just really, showing, this is calculated for the same way, when cinemas, for example, during the e-commerce boom, when cinemas were forced to sort of do booking engines for booking seats in movie theaters or cinemas, and they put a booking registration fee to sort of try and detract people from using the e-commerce engine. I think that's the sort of thinking you've got here. It just doesn't make any sense. In China and in Kenya with M-Pesa and in Philippines, these transactions, they're fractional cost to the merchant compared with what we see with the card schemes. So I think these guys have got it the wrong way around.
You got any comments on that, Knut Anders? Because these are
I think these levels are temporary. I think these are temporary, you only see them because essentially the Scandinavian countries are cashless, and with that in mind, you have difficulty getting paid when people are walking around in the streets and buying something ad hoc. And owning and renting a card terminal comes with a cost, and that's also a part of it. And this because it makes it easier. But for me, I think it is temporary to see these margins.
I really do think the big opportunity is credit, and that's where we see a margin and profit migrating in China. And I think that's what you have to understand is that when you have mobile payments, you can contextualize credit much better than you can with plastic, and I think that's the big opportunity from a revenue perspective.
Yeah, I totally agree with that. It's personalized, it's contextualized, a lot more, and you can help people in a situation when they're trying to pay and their funding is out, and you can help them out in that situation, which is sort of the channel play here, right? So you have to own that channel and build the front side of this and engage your customers to an extent where you get that trust relationship and you can help them out of other situations. There is another side, although the pricing here is very high and brings huge revenue potential for the bank. So we know these are the real prices here in Norway right now from the number one scheme. Now, I'd like to shed some light on one of the reasons why they could be higher than card payments. And you said earlier, Brett, that the card payments are sort of dumb and they're confined to these very specific situations where you can use them. Now, what we see here is that, so the 3.3%, which is on the higher end, that is the price that an online merchant would pay in the Norwegian mobile payment scheme if data is being shared in that context. They've made a specific product, which is called Express Checkout. So the merchant online detects that you have the mobile payment option available, and then it gives you a different shopping experience where it tells you you don't have to give us any information because you only have to add to basket and then click pay. And then in a GDPR compliant way, your data is being automatically shared with the merchant. So you don't have any checkout or forms to fill. And I think there's a good point there, not necessarily on these price levels, but I think there is an appetite, or we know and we see that there's an appetite for merchants to lower the barrier for customers to buy from them, and then taking away pain points that can be solved by data sharing, like filling out the form, filling out your shipping address and details like this. What do you think about these smarter ways of exchanging data relative to mobile payments, and whether or not that's something you would monetize?
I think that when you embed the payment into a customer journey, as you've just described, then there is willingness to pay for that convenience. That's how PayPal has grown on top of Amazon or eBay, just the one-click buy, and I think once you convert and you get a higher conversion and you're able to measure that higher conversion in any given circumstance, then that's something a merchant would pay for.
Right, and I guess that's why it's priced higher here in the Nordics. Okay, guys, so we have a couple of minutes left, and we have a bunch of questions. I just want to remind everyone that's listening that we will do our best to try to answer these questions offline as well. We do have some questions here that we could try to touch on. So one of the questions...
I'll answer one of them here. It says that money that leaves a deposit to a mobile wallet does not usually go back to the deposit account. So in the case of where you've got dominant mobile payments, that's definitely the case. So in China and Kenya, and also now in the Philippines, where you've got that. It is starting to happen with Paytm as well, although it tends to be a bit demographic based. But essentially, when you have mobile payments becomes a dominant form, people will transfer or cash up or cash in or top up their mobile wallet from their salary account, where they get paid by their salary traditionally, but it doesn't go back out. And so increasingly, this is why M-Pesa is partnering with banks like KBC, Kenya Commercial Bank, KCB, and others in Kenya to offer savings directly from the M-Pesa wallet. Same what's happening with Alipay. So it tends to be a one-way street.
Right. Do you have any input on that, Knut Anders?
No, not at the moment.
No, right. So we see that money flows in these systems, and I think you covered it quite well also earlier, Brett, in terms of the value of building like Alipay, where money stays in the system because it's so easily accessible and useful, and then you can build up new revenue streams, whether or not you're Alipay or if you're a bank that is controlling this ecosystem by offering them other financial services as well, like investment and savings products and so on. So we do have one more question that I think that we could follow, and that was the one relative to what would you do trying to launch a mobile payment system in a market that already has some sort of P2P service. And we see that a lot in Europe now, that banks are trying to deploy P2P services from inside their mobile banking app. So, you being representative for the bankers here, Knut Anders, would you launch a P2P service inside your mobile banking app, or would you bet on launching a separate app addressing the whole market?
Definitely the latter. Attacking the whole market. If you're to create a network, it needs to be independent of bank, independent of phone hardware, and independent of any telco. It needs to be able to be spread across the whole geography that you're targeting, and it shouldn't happen within a mobile banking app, which is targeted at one specific bank. We did some research ahead of launching Mobile Pay, whether or not it should be Mobile Pay by Danske Bank or just simply Mobile Pay. And this part by Danske Bank was actually confusing to consumers. So if we would have just listened outright and not considered our brand impact that we also wanted to target as part of the launch, we would have launched it without the by Danske Bank at all. Completely detaching it from the bank brand to allow for fast adoption.
That was clearly said. I think we're reaching close to the top of the hour here, and I hope that everyone that's listening felt that we answered the question. As I've said repeatedly, we will try our best to answer any leftover questions or new ones that are coming in now the last minute offline later and answer them to you directly. I hope you've got some insights in terms of what has happened in the mobile payment space. This is not the future, it's already happening. It's just a question of when in your market. And also got some insights in terms of the revenue potential, summarized in some extent on transactions, on merchants, and we see that in the eastern part of the world, they're building ecosystems and actually lowering the price thinking that financial services and transactions are going to be commoditized. So building a channel, owning that, serving customers, building a great ecosystem is very important. I want to leave you with a final slide so that you see who we are and what we've done, and we're one of the vendors that can help you build your own Alipay if you want to. And I want to thank everyone for tuning in. I also want to extend a great thank you to both you, Brett, and Knut Anders for joining us today and giving such insights for all our listeners. I'll conclude this now and hand it back to Tarek to close this down in the best possible way from a technology perspective and say thank you again to everyone. My name is Daniel Döderlein, and I hope I get to see you soon. Thank you.
Thanks a lot, Daniel. And really, that just leaves me today to just thank our speakers for that great presentation. I'm sure you'll all agree. And of course, thank you to Auka for sponsoring today's session. To all of the attendees, you will receive an email shortly that will tell you how to access the on-demand version of the webinar, or you can get that on our website. So that website for you is www.business-review-webinars.com. We do look forward to sharing further webinars with you. So if you'd like to keep an eye out on that website for updates, you can. You can also follow us on Twitter at BR Webinars for daily updates. And if you're on LinkedIn, please go ahead and join the LinkedIn group as well. That's Business Review Webinars on there as well. Thank you all once again, and I hope you all have a lovely day.